G'day all, Ben here, East West. I'm going to take a look at uranium again in this video. Pretty quiet week in uranium, unless of course you're holding NXE, and that has become a problem. So let's jump in and start off by having a look at what was formerly the poster child for strength. So we're just out here on a weekly, and we are obviously this week headed for our worst week since 2022. Okay, not great. But there's a couple of things going on here now. So I think the one thing you can see that the Ichimoku cloud has held its posture, unlike a lot of the others. But the one thing I'd see here is that the Chiku span now is heading towards the candle, so that is going to bring in sort of this area as the first potential area of support. We'll have a look at that. But I think the main thing that I'm seeing with this, and just keeping it simple, I turn the cloud off. The one thing that we'd been looking at with this is that, you know, the trend was a little bit difficult to sort of draw. It held so well through here, like multiple touches. It had a bit of an undercut there. I was kind of wondering, or maybe do you sort of widen it out a bit like that? But I think the one thing that this week has done is just solidified the argument now that this has now broken the trend, you know, that we had. A lot of the other stocks had already broken, but this one was one of the ones, I think, along with Denison, that it really showed some gumption and the trend wouldn't break. Now, you know, it was hard to draw the trend. So when it's hard to draw the trend, I usually like to use like a regression channel, probably there, just to show you a bit of a best fit. But this is just busted now. So for me, the trend in NXE is done. That this main trend, and now we're going to go into our more solid period of correction. And you could make the argument it's probably not unfair that we already started here, that this is where the trend finished and this is where we started chopping, and we've got these tops up here which we're going to look at in a sec, which is not unfair. I mean, you could definitely look at it that way. So in that case, you know, you could probably call this the bottom of the range, and now you've got a very stark double top rejection here at the top. So that it kind of looks like, you know, what we've been talking about is that, you know, the rally, the trend higher is done, and now we correct within the range, which is kind of the theme that I've been working on for a couple of months now. So just here on a daily, and I mean, what can you say about this one now? Because you know, we had the start here, we had this hold, and you can see here, just looking at this, you can see all the bottoms that have held in there as we traded back down here. We held, and then we started to ricochet away. Okay, so at that point you're thinking, okay, well, fair enough. Like, this looks like the chance for a trend to re-establish here, or just it's just a continuation of this. We just had this sort of little pause, but the fact that we double topped here, and you know, this is the other thing that you've got to look at, is that coming in, like you sort of double topped up here, and you wouldn't know that was a double top at the time, but of course the earnings have really upset the apple cart. They're not good, and the market hasn't reacted well to them. But the problem now, of course, is that we've breached these lows, which kind of takes out the idea that could be an established, you know, a smaller trend establishing on a you know, a smaller scale, which would just feed into the idea that this was continuing on, because at this point it did look like it was continuing on, but it's just, this has really rocked the boat now. It really has. So I think, you know, your next point of call here, this is kind of stating the obvious, but you know, you just got to think about, okay, well, this now looks like it's kind of, you know, into that range, but this double top up here, just shy of $9, is obviously now going to be a pretty crucial level as we move forward in time. But all you can really say now is you've got to expect this to come down and start testing to the bottom of this, I would suggest. Okay, that would be, I think that will happen at a minimum. You know, we're going to come in and just test through here at a minimum. I would expect that's going to happen next week. And then I would guess that in a broader sense that you run the risk that we're going to come down and test into the retracement zone, which is sort of just going to line up, you know, sort of here. So if you call along this, I'd be mentally prepared for the trip down to here at least. I'm not saying that's what will happen, but I'd be prepared for it, expecting it to at least get down here. And if that's too uncomfortable for you, then dump it. well, you've got to do whatever you think's right for you. But to me, that just looks like the most probable path. I mean, this is pretty steep. There's a fair bit of bailing out, so you just wonder who's going to come along and buy it at this stage. So I'd just be looking for those areas, and the other thing I'd be looking for to occur. So just get these Kelton channel. I mean, obviously, the other thing I'd be looking for is some sort of bottom where you start to get some divergence away. That would just be a good sign that the momentum's running out. But if you can couple that with some free bars outside the Kelton channels, okay. Now, in terms of the daily, you won't really get it. You might be better off looking at this more on a short term. And you can see here on the 4 hour, we're not quite. That doesn't line up. We're not quite free barring it. We're not quite getting outside those Keltners. Okay, so once the market starts printing outside, and you want to see a bar that's completely free of the Keltner. So like these ones. Okay, just signs of short-term exhaustion. Okay, you can see as we got outside here that the market corrected afterwards, but you just look for the same sort of thing to happen on the downside. That's on the 4 hour. The 1 hour, it is happening. Okay, so we've already got it outside on the 1 hour, but I wouldn't put as much weight on the short term as I would on the longer terms, especially if you can see it on the daily. That would be then the point where you're starting to really pay attention. Okay, so these are volatility based, and obviously with the volatility that we've had this week, they've widened out, so you're going to have to be a bit patient. But that would just be the combination of things I'd be looking for NXE. Okay, so but be aware that the trend has now broken in this, so to expect another massive rip soon is not a high probability thing, in my opinion. I think you're much more likely to come down and test at least to here and possibly lower. That's how I would sit with that this week. So just moving over to CCJ here, and this cup and handle that I've been looking at is still sort of valid, but there's a couple of things that have happened here that I wouldn't say it disqualifies it, but perhaps it's starting to reduce its probabilities of being a good trade. So we've got this little breach of the 50% of the cup, which isn't such a massive problem on itself, but now we're also when you read through the actual literature of how you're supposed to structure these things, I don't think it's hard and fast, but generally they talk about the handle being about a third the length of time of the cup, and then we're now beyond that as well. So the other problem is that I think you're kind of looking for more a handle that's more like more like the bear flag, which we've kind of broken out of a little bit as well. So whilst I wouldn't say that disqualifies it, it's probably maybe just reducing its odds of being a good sort of trade in that regard. Now, the other thing we do here with the cup is we take the depth of the cup off the break, and that would be the profit target, right? So that would put this thing up here. Now that's a fair way away. I'm not saying that won't happen. I think it's probably quite likely it does happen in time, but it might be 2025, it might be 2026 before we get up to those levels. I don't see it as just exploding up here now. So I don't know. And things are warming up, right, in the northern hemisphere. Maybe it's not going to get much of a run on. Now, the other thing that's just slightly concerning me here is that you could just see this divergence starting to creep into the daily. Okay, and this week we've just tried again to break through these tops, and we just cannot do it. Not at the moment. I mean, maybe next week it's different, but we'll deal with next week. We've just got to deal with this week and what we can see on the hard right edge. And what I'm seeing, okay, quite starkly now, is that it's just battling to get through here. Yeah, I was pretty encouraged by how it responded to those not so good earnings. Like that's a pretty good run up. We just see on the volume profile, and when I'm looking at this volume profile, I'm more just trying to look at what is transpiring up the top. And obviously, this is a bit wicky, but that's a pretty bad down bar in relation to what we've just seen. But the problem is, I just think that as you expand this out, you can run this out all the way to the current bar. We've got a glut up here. Okay, there's no doubt we've got a glut up here. Some of that will be tied into this churn, but what the problem for me is, even up here, there's no volume. Like the sellers can't find any buyers to interact with. No one's chasing it up here. And there's just a good area of supply through here that the market can't break down. So, what does all that mean? Well, kind of good news and bad. I mean, I'll just put the cup and handle idea aside for the moment, but I would just suggest, that the thesis that I've been sort of working off, which is that the extended trading range, it may be beginning to break down a little bit, because these two big heavy blue lines, that's yet to really establish. I mean, we've got the double top there, but we've kind of pierced it, but we don't really have a major test of both zones. So it's still forming, but we do have something smaller forming underneath it. Okay, so are we going to get something more like that? Okay, because if we start getting this little range building, then you start to think, okay, well, we're starting to become less likely to test back down, and the idea of the bigger range might start to run out of puff. I'm not abandoning that. I still think that's my most likely view, but this might be a little range building within, and if we do get a little range building within, we start to get more likely to break through to the top side. But I don't think that's what's going to happen. Okay, I'm more just looking at. I'm still just looking at the idea of the big range. Okay, but we yet to come back down and test. So we will see. But I just looking at this on the short term, just the way it's rejected away from these areas. And there's just not a lot of business getting done up the top here. There's just doesn't look like there's a lot of willing buyers above this level, and the sellers are lining up to unload their stock. So that's why I'm kind of just thinking, all right, well, maybe we're just going to at least come back down and sort of test back down into this zone early next week. But we will see. But like I said, the other thing that's just got me a little bit, that I'm just staying a little bit wary of here, is that diverging momentum. Okay, just that would suggest to me that the power of the up bars is starting to run out versus the power of the down bars. That's basically all you're really looking at there. It's just momentum. It's just telling you that the momentum, okay, as we pushed up to here, is beginning to wane through the market. So I'm a little bit wary here, and I'm just cognizant that maybe we come back down to test at least here, and then my big view remains down there. Let's finish off this week with UEC. Now, this was another one. It was kind of like NexGen, where it was just such a beautiful trend, but now it's finished, right? And I think it's pretty clear to see that we're now stuck in this trading range where we're just not going anywhere. I think the market's just now moving into the point where we're on weekly. Remember that it's just, like I said, it's got to take some time to digest that rally, because it was a big rally. And the Ichimoku cloud on the weekly is telling you that, because the Kijun and the Tenkan have come together. So that's just like, it's like a fast moving average and a slow moving average coming together, which is just telling you that the momentum in the market isn't there. And that, again, is encapsulated by the RSI, which is just showing you that there's no momentum. It's completely neutral, as the market is completely neutral. So what can we say about this one? It's there's probably not a great deal to say, sadly. The only thing I'd look at is, potentially we've got, this swing up, this swing back down, which is held. But, of course, you've got to make the higher high for this to solidify. And we seem a fair way away from that. And, of course, you can just see itself, right? When you just see a band of wicks like that, the market is just rejecting that price, okay? Now, on the short term, you could probably, those wick rejections, they just don't really fill you with a lot of confidence, do they? I mean, a little trend here like this, maybe this is kind of, I think that's probably reaching. That's just looking for anything, I think. I mean, it's just, it looks like a stay away scenario for me, this UEC. It just, I wouldn't put too much weight into this being a trend. Let's just put it that way. It's just, to me, it just looks like a very uninteresting stock now after what it did. But I think it's just, once again, you've got to let that time go by, and it's just now beginning to come into the type of market where it's not going to go anywhere. Okay, it's going to correct. Okay, like this. Okay, that sort of I know it's not a very nice thing to think of, but that it kind of is what I'm expecting to sort of happen. So I'm not saying it's going to go on for this long. It could be a much shorter time frame, but I just think that's just going to be the general. Maybe it's maybe it's shorter. Maybe it's more like that. I don't know. Maybe it's just going to do this through the whole summer, the northern hemisphere summer, then come into winter, it's going to kick on again. But I think, for me at least, like I'm reaching to say anything about this one. So if you're a holder, just I think you've just got to lock yourself into the possibility that you're in for a long haul now. It could be a couple of months before this one does anything, and maybe this is just going to be its trading range as well. And we're just sitting right smack bang in the middle of it, but definitely that trend is done. So patience, there's not really anything to say about this one, and that it's a bit of a problem with a lot of the uranium stocks that they just are starting to go flat, which is kind of just feeds into that idea that I've been talking about, which is that we are now just faced with the problem of time going by. So look, I'll leave it there this week. There's probably not a lot more to fill in. So look, have a good week. I hope you enjoyed it. There'll be more to do next week, so let's just see. So thanks for watching. I'll see you next time. Bye for now.